Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And if you have not joined the Vested Interest community, go ahead and hit that subscribe button down below and join us on this journey to financial freedom through dividend growth investing. That's what we cover here. Stock pick of the day series like this one, Monday through Thursday. I cover my dividend growth portfolio every Sunday, all the stocks I buy or sell throughout the week, any dividends that were paid, options that I'm playing with, that sort of content. So into that, again, hit that subscribe button and join us on this journey to financial freedom. Today we are going to take a look at Sysco Corporation. It is a food delivery company and it is April 12th. Let's jump right in. So if you want to know more about them, check them out, www.sysco.com. That is their homepage where I pulled this information, right? They are an international company. Sysco is the world's global food service leader. Our robust international network supports customers in 90 different countries, so that's very important. You can read through the rest of this, but some of their specialty companies, Fresh Point Specialty Produce, Buckhead and Newport Meat and Seafood, European Imports, Guest Supplies, Supplies on the Fly, Greco and Sons Italian Specialty, Asian Food. So that kind of gives you an idea of the type of companies that they deal with. And they do deal with a lot of broadline OPCOS, distribute a full line of food products and a wide variety of non-food products to both independent and chain restaurant customers. So that if you're going to some of the bigger chain food restaurants out there, you're probably eating some food that was delivered by Sysco Corporation. That's a quick overview of the company. And the reason we are taking a look at them today, they were down 4.46% on the day. Huge drop. Anytime I see a drop that big, we're going to take a look at the company. We are talking about Sysco Corporation, ticker SYY, out of the, I believe they are a consumer staple food, since they're food delivery. That should be right. Company here, 52-week range as low as $70.61, as high as $91.53. So they are definitely closer to that 52-week low at $74.83 currently. Average volume 2.3 million. Today's was 3.3. You can see that clear sell-off throughout most of the day, just a straight down, pretty much sold off. So I would take a look at what's going on. Maybe some bad news came out, earnings report, something along those lines. Market cap of 37.984 billion, a beta of 1.09. So they are more volatile than the overall market, just slightly. PE ratio is elevated, 27.01 on this one. Usually like to see something in the teens or lower. Earnings per share, EPS, is $2.77. That's decent. Earnings date, the next one is coming up between May 8th and May 12th. Forward dividends, $1.96 on the year. They are a quarterly payer, so divide by 4, though we'll see that here in a minute. And they have a decent dividend yield at 2.54%. Ex-dividend date, the last one here was April 5th, so just passed. If you bought them now, you would not be in line for the next dividend. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information, not affiliated, just one of the sites I like to look at, $88.42. So speaks to some potential upside appreciation. Now I like to get into the statistics and the financials. One of the things I like to pull out of statistics is what I like to look at, dividend yield theory, to see if they are potentially over or undervalued. And that basically looks at their 5-year dividend yield, 2.36, and their current dividend yield, or their forward dividend yield is what they call it, at 2.54. If the current or forward-looking dividend yield is higher than the 5-year average, that speaks to undervaluation. If it was lower, that would speak to overvaluation potentially. So this one looks to be potentially undervalued slightly. 2.36 is the average, 2.54 is the current. And then I like to look at the financials and go into free cash flow. You can look at their balance sheet under financials, their income statement, that's all there. I like to look at their free cash flow. That's where dividends are paid out of. You want to see it growing over time. So 2019, 1.7 million. 2020 was 898,000, so a drop there, but then back up from 2020 to 2021, 1.4 million, and then current, or at least end of year, so a drop back down. So they are kind of up and down over the years, and from 2019 to date, they are actually down from 2019 to now. So I would say they do not currently have growing free cash flow, so that's a little concerning. And they are repurchasing stocks, so you like to see that as well. You want to see a company repurchasing or at least maintaining the level of stocks. You don't want to see them diluting you over time. Now, another source that I like to look at, stockanalysis.com, another one I'm not affiliated with, but I always recommend more than one source of information to make sure that you can back check and see that the information you are getting is accurate. And they have 24 stock analysts that have taken a look at this stock. They call it a consensus buy. They have a low estimate of $80.80. It's currently sitting lower than that. So if it came back up to their lowest estimate, that would be a 7.98% increase in the stock price. They have an average price of $90.19, which would be a 20.53% increase in the stock price if it hit that number. And if it happened to hit their high of $99.75, that would be a 33.3% increase in the stock price. All the while, you can collect that 2.5% dividend yield if you bought them now. Obviously, if you waited for them to pull back further closer to that 52-week low, that would be a higher dividend yield and better returns. Now, this is where I typically would show you my position. I do not have a position in Sysco Systems. It is one that I have owned in the past. They got a little out ahead of themselves on payout ratio, which I always look at. I like 75% or below. This one is currently sitting at 68.60, so that would meet the criteria there. It does have a growing dividend, 4.26%. You can see that back in March 2022, it was 47 cents. It's currently sitting at 49 cents. I would expect sometime soon they have another dividend raise if they are going to continue raising that. But currently sitting at 49 cents per share per quarter. So that's your payout, and it is a quarterly payer. Well, these are quick hitters trying to find value in the market. Getting harder now that things are starting to turn more green, but that was a big drop for Sysco Corporation today, over 4%. So we wanted to take a look at them to see if they were potentially presenting some value there. Looks like they may be starting to get there. All the criteria you'll see here at the end of the video what I look for, and you can go back and compare and do your own reference and see if it meets the criteria. I would say it's getting close. I would like them to pull back maybe just a little bit further. 72, 73 would be nice, even though it's right there. I mean, if you're looking to buy Sysco, this might be an opportune time. It's just not a company that I'm looking to add back into the portfolio right now. I do want to see them continue to raise that dividend and make sure that free cash flow is growing over time. All right, that is it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. And if you have not started your own brokerage account, there is a Webull link down there. If you use that to set up your brokerage account, deposit some money in there and start trading, investing in stocks with us, that's a way to help out the channel. You'll get some free stocks. I'll get some free stocks. You don't have to use that. It's perfectly fine if you don't, or if you have a brokerage account already. Dropping a comment down below is another way to help. Hitting that subscribe button, the notification bell, all that good stuff down there. The like button helps a small YouTube channel like myself with the YouTube algorithm, and sharing with anyone you think that might find value in the content as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have some stocks you'd like me to do a stock pick of the day video like this one, go ahead and drop it down below, and I will work it into the rotation whenever they pull back and see if we can present the same type of information for you on something that you're looking at. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. And for those of you who stayed this long, you can see my investing criteria. I did add one to this. I do like to look at the return on invested capital and return on equity. I like 10% or plus, or compare it to the industry average. Sometimes 10%, sometimes companies under 10% with return on equity and return on invested capital is fine, depending on the company they are. Like retailers sometimes have a low return on invested capital because they're capital intensive projects. So there are, that was the only add there. Basically the same thing. Understand the business, growing free cash flow, growing dividend payout ratio of 75 or less, unless it's a REIT, a BDC, something like that. Check the valuation based on dividend yield theory. That's just a first step in the metric. You should do a dividend discounted cash flow on that, but that's a good way to kind of give you an idea if they're undervalued. Buy below the current cost basis. If I own it, I want it below my cost basis. If I don't own it, I'm looking for something within 15% of the 52-week low. Again, ROIC, we added that one, so there. And for financial companies, you want to look at price to book. Price to book near 1 or lower is what you're looking for. 1 really being fair value, and anything below that being undervalued for financials. And the note below must meet 4 of the 7 if it's not a financial company, and it must meet 5 of 8 if it is. That is what I look for whenever I'm looking to add a stock, or what I'm looking to add to already in my position throughout the week. All right, a little bonus for you that stayed this long. We'll see you in the next one.